Four pillars of this stock market converge over the next few days. First, there's earnings. This is the busiest week for quarterly results of the season. Then there's the Federal Reserve, which begins its two-day policy meeting tomorrow with a decision on interest rates due on Wednesday. Trade talks between the U.S. and China are set to resume, and the nation's labor market, which has been fueling the consumer, comes into focus with the release of the monthly jobs report. But today, investors were willing to wait and see what happens, with the major indexes hovering around their all-time highs. The Dow Jones Industrial Average rose 28 points to 27,221. The Nasdaq fell 36, and the S&P 500 was down 4. Bob Pisani has more on what lies ahead for investors.
Let's call it the calm before the storm. The market is bracing for the busiest week for both earnings and the global economy, and a Fed meeting on top of that. So right now, investors are reassured by three things. First, trade talks haven't blown up yet. Second, central banks are keeping interest rates low and will continue to do so. And third, earnings are not collapsing. They're flattish, but they're not collapsing. First on trade, U.S. Treasury Secretary Steve Mnuchin is in Shanghai to restart trade talks. The markets aren't expecting any kind of breakthrough. They just need to see that talks are continuing and not faltering, and the market seems content with that, at least for now. Second, the earnings roster was light today, but later in the week, we'll get results from consumer names like Clorox and Procter & Gamble, tech titans like Apple and Samsung, and Chevron and ExxonMobil. The market needs to see the guidance is still coming in better than expected, and the tech earnings in particular don't weigh estimates down. And finally, on the economy, the markets are expecting the Federal Reserve to cut rates by at least a quarter point on Wednesday, but there's still a minority who believe that the Fed will cut by a larger 50 basis points as the global economy is a bit weaker. It's difficult to say whether 25 basis points will be enough to sate the market's appetite for more stimulus, or whether it could spark a modest sell-off. The Fed will have plenty of data to watch ahead of its decision, including U.S. data on personal income and spending, home sales and consumer confidence. Also, we have manufacturing data from China and European retail sales. We'll also get the widely watched July jobs report on Friday, expected to show a gain of 166,000 jobs in the U.S. last month. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.